Hello, it's Friday the 30th. I'm FX Plu, and this is the market brief. So the next stage of the roadmap to recovery will go live around the middle of next month, but there are lingering concerns of another spike in the COVID data. The vaccination programme has of course been a big win, but Boris attributes the success equally to the third lockdown. I'm actually getting my jab on Monday. Yes, I know, it's a surprise. You don't think I'm old enough, but it's okay. I'll take my ID in case they accuse me of being a pesky kid jumping the queue. Clever. I don't know which type will be administered or whether it'll have that mind control chip everyone was worried about, but I'll happily say see you next Tuesday to any anti-vaxxers who want to find out more. Do tune in again on Tuesday after the bank holiday for another little update. Meanwhile, in the city, the Bank of England is looking at post-Brexit support for small businesses. But current sentiment is that the monetary policy support for the wider economy should be sufficient for the time being. A little bit more pressing is the challenge they face to access EU financial markets. As we know, Brussels don't want the UK firms to compete on a like-for-like basis with European financial service providers. And there was even a story circulating yesterday suggesting France is trying to link access to the UK's fishing grounds to UK access to EU financial markets. Fish for funds, eh? Mon Dieu, I've heard it all now. In the market, sterling continues to challenge 140 against the dollar, but as the Fed gets closer to tapering US support, we may be on borrowed time. For now, though, we kick off around 139.40. In the US, the economy is starting to show signs of overheating. Q1 GDP saw 6.4% growth between January and March, and that's quite a contrast to the outlook that Powell provided on Wednesday. But the Fed continues to assure markets that they are on top of the situation. Pending home sales did come out well below expectation, which is a plus for the Fed, as lack of housing stock causing price increases would have added more inflationary pressure. But inflation top trumps. I'm not sure how a few more houses for sale plays out against 6.4% GDP growth. But I suppose that's why I'm scooting around the countryside while the experts are crunching the numbers. Nevertheless, while it may look like the Fed should do something to steady the ship, for now they are comfortable with their own plan to tackle rising inflation, whatever that plan may be. And that means that the dollar index remains under pressure from the ultra easy monetary policy. We saw euro dollar slip a little around the 121 level yesterday, but trading ranges were pretty tight across the board. We opened this morning ahead of the long weekend around 121.15. So yeah, that's it from me. End of another week and going into a long weekend. Hope you have a good one and do join me again on Tuesday.
If you do not have a clue, then just tweet through and ask FX Blue.